Hello, traders. FX Pip Collector here. Today is Monday, February 3rd, and this is my morning video where we take a look at all the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely make sure you join my free Discord trading community. It is 100% free to join. The link for that is at the end of this video down here in the corner and in the description of the video. If you would like to join my membership, you do so by joining at fxpipcollector.com. Gets you access to all the benefits listed down here below and more for only $30 per month. So anyways, we had some big gaps over the weekend because of all the tariff news coming out of the U.S. First thing first is we need to look at the news calendar because we have quite a bit of news coming out today, especially for a Monday. We got manufacturing PMI and then IMS manufacturing PMI. And if you actually click on this, this is the purchasing managers of manufacturing index. So this is what manufacturers are basically purchasing, and a lot of manufacturers are frontlining the tariffs, meaning that they're loading up on things that they know they're going to need over the coming year, to that way to save themselves some money because of the upcoming tariffs. So this news right here, because of the tariff news and because it's related to that, definitely may be a big mover today. So make sure you are paying attention to the US dollar pairs around that time. So, anyways, like I said, we had a big push over the weekend, or at the market open. The U.S. dollar index doesn't have that because it pretty much always fills the gaps automatically. But nothing really has changed for the most part. I mean, for the most part, this is still five waves down. This move up right here definitely still could be a crutch into these five waves. We are at the 78%, so if there is going to make a lower high, then this is probably the place that it would do it. It would probably go down from here and make either a wave C, which would probably look like this and turn back up, or possibly it would make a wave 3, which a wave 3 would basically just continue to make lower lows, lower highs. I have no idea whether it's an ABC or whether it's a 1, 2, 3, and for me, it doesn't really matter whether it's an ABC or a 1, 2, 3. Trading strategy is exactly the same for an A and a 1, exactly the same for a B and a 2. It's exactly the same for a wave 3 and a wave C, at least until you get to about this point right here. And now that we have pretty much a good idea of what we think is going to happen on the US dollar, we pretty much know exactly what to do on all the US dollar pairs also, because they're all just following the US dollar index. Now, I am labeling this as possibly a B or 2, like I just said, but we have to keep in mind that the trend is up and that this could go up and make a new high. It doesn't have to turn down to make a wave C or a wave 3. So don't assume that it's going to turn down. Really, what you would want to see on sort of time frames is a nice break of structure to the downside, telling you that the wave B or the wave 2 is complete. So anyways, let's start off with the euro dollar. Big gap on the euro dollar, which is a big gap on pretty much all dollar pairs. Really, pretty much all these pairs have big gaps. Now, this has not taken out the previous low yet, but boy, it definitely went pretty deep. Most gaps do fill within 3 trading days, is kind of the rule. I think it's like 90% of gaps fill within 3 trading days. So you would kind of expect that this gap would fill, but it doesn't have to fill now. I mean, it could potentially fill tomorrow or maybe even midweek, end up doing something like that. The trend is definitely still down, and we definitely should be looking for shorts still. We are likely still in a wave B or a wave 2 on the much higher time frames, just like the dollar index. So going down to the 1 hour time frame, like I said, most gaps do fill within 3 trading days. Does not have to fill today. This could easily, go up, make a little bit of a false entry to go long, trap people, and then just dive right back down. I would definitely suggest looking for shorts because the market flow is down. Even though this is a huge gap, it really didn't change anything for me. I mean, it still looks like an A, still looks like a B, still looks like this could be a 1, 2, 3, 4, 5 of C. So if it does break structure to the upside with some nice momentum, then that still could be the end of an ABC. And it still could start a brand new uptrend, just like I was showing that the US dollar could start a brand new downtrend for either a wave 3 or a wave C. All I'm saying is don't assume that it needs to go up and do that today. It potentially could go down and make new lows before it even thinks about going up to make a wave 3 or a wave C. So moving on to the pound dollar, also has a big gap to the downside. Pound dollar is quite a bit stronger to the upside than the euro. It didn't gap down so far. Definitely still looks to me like 5 waves up. Definitely still looks to me like this move down could be a crutch into this move up right here. We got our Fibonacci retracement on this move up. We're looking to see if it does reverse back to the upside for a wave 3 or a wave C. But just like the other pairs, we don't really know for sure if that's going to happen. I mean, it could potentially keep going. The trend is down. Struts is telling us the trend is down. The trend is your friend. This thing could easily go down and make a new low. I would definitely recommend looking for shorts on shorter time frames. Now, going down to the 1 hour time frame would definitely make you think that you want to try to go long, but that's usually just a misconception of these shorter time frames. Nice 5 waves down could be an A. Nice 3 waves up could be a B. 1, 2, 3. This could be just a wave 4, then it goes down, makes a wave 5, and then if it reverses back up and breaks structure, that's the end of a correction and beginning of a wave 3 or a wave C. So if I do see this, double bottom 3, 4, 5 shape at a Fibonacci level with a break of structure, then I'll happily go long. Otherwise, I would be looking at any move I see to the upside as possibly just a crutch into the downtrend. Just like the other dollar pairs, this could keep going down. I would not even think about going long unless we had a double bottom break of structure at a Fibonacci retracement level. So moving on to the Aussie dollar actually went down and made a new low. And if you go all the way up to the weekly time frame, the target that I've been kind of looking at is this 100% level, which we really still have not hit that level yet. So we still may have a little bit more downside potential on some of these pairs. Now that we had this new push down, it actually looks even better as a possible 1, 2, 3, 4, 5. So we could be getting somewhat close on these higher time frames to making a big turn up, making the end of a trend and the beginning of a brand new uptrend. But according to my weekly time frame, we haven't hit that Fibonacci level yet, so it could possibly go down a little more. Grab that Fibonacci on the weekly time frame and then turn up, maybe midweek or later on this week. Going down to the 1 hour time frame, I would definitely suggest looking for shorts. Now, like I said, most gaps do fill within 3 trading days, so it could try to go up and fill this gap today. I personally wouldn't be trading just based on this and having to go up and fill the gap. It might make a push up and then end up going back down, and I actually think it probably will end up doing something like that. Just like the other pairs, I would like to see a double bottom at a Fibonacci level, something like this. Then I would like to see an impulsive up and a break of structure telling me that this whole move down is over. Until I see a picture like this, I would be very, very cautious looking for longs because, like I said, it doesn't really have to go up. It can potentially make lower lows, lower highs, and just keep on trending down. The trend is your friend, and the trend is definitely down on all the higher time frames. So let's move on to the Kiwi dollar is exactly the same as the Aussie dollar, which is why I don't really analyze it. I definitely will trade it, but I don't really spend much time on it. It's exactly the same as the Aussie dollar. Moving on to the dollar CAD. Dollar CAD also made a huge push up, and the dollar CAD did take out this high. I've been saying for a while that it would make a lot of sense for it to go up and take out this high before we went down. Now, just because we took out that high doesn't mean that it's just going to automatically turn down. I'm just saying that now that it did take out the high, it would make sense if it does turn down. It doesn't have to, though. It could easily just keep going up. One thing you have to keep in mind is the people that try to, identify the tops and bottoms of these higher time frame moves are usually the ones that end up losing all their money. So it definitely looks like it could be a wave 5 of wave C, especially on these higher time frames. But just like I was saying about the other pairs, it doesn't really have to turn down. It could go up more before it decides to turn down, especially because the CAD is has a lot to do with the tariffs right now. So anyways, going down to the 1 hour time frame, most gaps do fill within 3 trading days. So this gap probably will fill, by Wednesday this week. It doesn't have to fill today. It could potentially just, dip into here a little bit, grab some liquidity and just make another push up. So I personally would definitely suggest looking for longs. Now, if this does just continue to make lower lows, lower highs, lower lows, lower highs, and eventually go down and give us a break of structure, that's probably telling us that the wave 5 is over on the higher time frames. But unless I see a nice clean break and hold below structure on preferably a higher time frame, I would be very bullish and I would definitely still be looking for longs. This, like I said, might just dip into this a little bit, grab some liquidity and just push right back up. So the trend is your friend, and I am definitely still looking for trades in the direction of the higher time frames, which is definitely still up. So moving on to the dollar Swiss. The dollar Swiss was an amazing trade that we took. Like I've been saying, most of the time it does take out a wave A or wave one does take out the wave four, the previous trend, which it still has not done. So we're gonna have to keep an eye on this. It potentially could just keep on going up. Looking at all these dollar pairs as a group, I do think there's a good chance that these trends are not over. They may end up pushing up a little bit more. I can't even imagine how many people are trying to trade this to the short side, trying to fill these gaps on all the dollar pairs. And that makes me think even more that it's going to go up and stop everybody else out before it actually does go and fill these gaps. So, anyways, I'm definitely still very bullish going down to the 1 hour time frame. Like I've been saying, most gaps do fill within 3 trading days. It doesn't have to fill today. It could potentially make higher highs, higher lows, and go up and grab this weekly, daily time frame liquidity that I have up here. So I would definitely suggest looking for longs. The trend is your friend. The higher time frame is telling us that the trend is up. No matter what you may think about, the trend is up on the higher time frames. And if you are looking for longs, you are trading with the trend. And trading with the trend overall is going to be much more profitable in the long run. So don't assume that it's going to go down today and fill these gaps. It definitely does not have to. Moving on to gold. Gold didn't really make a gap like a lot of the other pairs, but gold did take out the previous highs. Gold is back in all-time highs right now. Now I got my Fibonacci retracement on this move down set up with the extra levels because these are set up for Fibonacci extensions. So the 123 and the 138 is the most likely area for a wave B flat to go. So if this is really a wave B and it's going to turn out to be a flat, then the 123.6 and the 138.2, I believe, is the most likely area for this to go. So now that we took out these highs, I'm actually thinking that it's going to go up to here or here before it actually ends this three-way pattern, probably forming a flat like an a wave B, an expanding wave B, and then down for the wave C. So definitely still very bullish on this overall too. Just because we're in all-time highs on gold does not mean that the trend is down now. We made a pretty significant move to the downside, but one thing you kind of got to notice is look at this. One, two, three waves down. That was a pretty strong move down, but that was just a correction to the last 5 waves up. That was definitely an ABC correction to these last 5 waves. Now, I'm very bullish on the higher time frames. I don't know exactly how it's going to play out in this 1 hour time frame. It could possibly end up, going down again before it goes up. But even if it does go down, I would highly suggest looking for longs. The higher time frames most likely are going to continue up. I personally think it's very dangerous to try to go short. It might just push down a little bit, make a higher low, and then head up towards that 123 Fibonacci extension from the higher time frames, which is right around the 2850 area. So we still have a lot of upside potential on this, potentially maybe about $55 to the upside. Like I said, whether it goes down now and before it goes up or not, who knows? If it does go down, that would actually make for a much clearer entry to go long, which would be awesome. If it doesn't go down, it just keeps on going up, then I would definitely just continue to look for longs at the end of every single pullback I see. So keeping that in mind, let's move on to the euro yen. Now, I personally think that all the yen pairs have ended a wave B. I personally think that every single one of these yen pairs is now going down in a big wave C, which this big wave C will likely take out all these lows right here. So I think we are likely in a move to the downside on this. I think we should be looking for shorts. I mean, it could possibly pop up, but I think that overall the trend is down. And I think on these higher time frames, you will continue to see lower low, lower high, lower low, lower high. So keeping that in mind, we need to assume that anything we see to the upside on the sort of time frames is likely just a correction to the downtrend. Look at this shape right here. Last week, if you've been watching my videos, you probably know that I was saying last week that this probably is going to pop up, but that move up is probably a wave C. And it's probably just going to keep on making lower lows, lower highs. Hopefully, some of you went short right here because last week in my videos I said that if it does go up, it's probably a wave C and it's probably going to make a lower high. It's probably going to continue the downtrend, which is basically exactly what happened. So yeah, I mean, definitely looking for shorts because the higher time frame trend is down, and I think we potentially have a lot of downside potential on the yen pairs. Moving on to the euro yen, same thing. Either go to the weekly time frame or zoom out on the daily, and I think we are going down for a big wave C and wave 4, which I think will take out all these lows. Maybe not all the way down here, but probably at least down into this 150 area. I think this is an A, B, and I think we're going to go down for a wave C. So I'm definitely very bearish on the yen pairs right now. Very bearish. Big gap on the euro yen, which doesn't have to fill now. I mean, it could just keep on going. These gaps could stay open for months. Most gaps do fill within 3 trading days, but sometimes you have gaps that do not fill for weeks or even months. So don't assume that any of these gaps need to be filled today or even this week. They could be filled 3 months from now for all we know. So going down to the 1 hour time frame, I would definitely suggest looking for shorts. If it does pop up, which I don't know if it will, who the heck knows what it's gonna do on these sort of time frames, but if it does pop up, I would go short. Just like I would recommend going short at the end of that three-way pullback, and this three-way pullback, and this three-way pullback, and this three-way pullback. If I see one, two, three waves up, then that is another shape of an A, a B, and a C, and that would be another sorting opportunity for hopefully the continuation of this big downtrend that I think we're in on the much higher time frames. So moving on to the pound yen, same thing as the other yen pairs. I think that if you zoom way out on the daily or go to the weekly, that we're in an A. I think the B is already over, and I think we're already going down for wave C. I think in the long run, this is going to keep on making lower lows, lower highs, and eventually go down and take out all these lows over here. So keeping that in mind, I'm definitely very bearish. And the pound yen actually already filled the gap, so I mean it might just take off from here. Going down to the 1 hour time frame, what would I be doing? I wouldn't really be trying to count anything. I would be looking for one, two, three-way pullbacks to go short. I'd be looking for one, two, three-way pullbacks, one, two, three-way pullbacks, one, two, three-way pullbacks, one, two, three-way pullbacks to go short for the continuation of this downtrend. All I'm doing is looking to see what direction the higher time frames are telling me to trade in, going down to the shorter time frames and going short every single time I see what looks like a three-way pullback, hopefully for the continuation of a big wave C of wave 4 on like the daily, weekly time frame to the downside. So yeah, definitely pay attention to your charts. Pay attention to the news, but unfortunately, a lot of the big moves that are going to happen, I think, are going to be unscheduled news events. It's going to be things related to the tariffs. So definitely pay attention to what Trump is potentially saying and what other countries are potentially saying about the tariffs. The market is going to be on edge, I think, waiting to find out what all that's going to do, what's going to happen with all the tariffs and stuff like that. So definitely pay attention to unscheduled news. Unscheduled news is probably what's going to end up moving these markets more than scheduled news over the coming weeks, months, and potentially next 4 years of Donald Trump's presidency. So, anyways, if you have not done so already, definitely join my free Discord channel, link down here in the corner and in the description. Or if you would like to join my membership, check that out at fxpipcollector.com. Get you access to all the benefits listed down here below for only $30 per month. So, anyways, as always, thank you and happy trading.